All right, 5-minute traders, good afternoon. I wanted to take a look at Priceline, which frankly I haven't looked at in a long time. And I saw an article in The Economist this weekend talking about the most valuable travel property of all time, and of course that is Priceline. Really an amazing story this company has had with William Shatner as its spokesperson. Most people are familiar with. By the way, he cleaned up with taking stock payment for a great piece of his pay, and has been the spokesperson for almost 2 decades now. And you know, we saw this thing come public in the peak of the internet bubble, and hit a price of nearly $1,000, crashed all the way down to $6.56. There was a number of reverse splits in here, by the way. Also, I remember this thing was actually down to 60 cents. So it did split a number of times when things were very low. And then from there, it crashed again, bottomed out, and then saw a recovery up until the 08-09 crisis. And then the pullback wasn't so severe compared to as low as it got during the 2000 and 2002. Now what I'm seeing is there's a rally that we've had now, much like the rest of the market, that is almost, let's call it 8+ years long. And we are way, way, way above the point of control on the daily chart. And I just want to mention right here, the point of control right here, just for the last year look, is back to 1480. Now, I'm not suggesting in the next week or so that this is going to happen, but what I would like to see is I would like to take a look at some options plays over the next couple weeks. What I'm going to do, and this is a riskier strategy, is sell both. I'm going to sell what is called a strangle, which is out of the money calls, and I'm looking at the 2075 strikes. Right now you can pick those up somewhere in the 270 to 380 area. I would sell equal amounts of the 1950 puts, which again are right around the $2 area. So all combined, you should be able to, for each contract that you sell, you should get somewhere between $450 and $500 credit. And the way the trade works, and what I'm looking at, is August 4th expirations. So these are weekly expirations that are going to expire on next Friday. If the stock closes between 1950, or rather 1945 and 2080, and we're trading right now at 2024, you can look for the full profits to come in the next 5 days. So this is our pick. If we start getting outside of this, the either end of that trade, 1945 or 2080, then you're going to have to manage that by either adding some stock to the position. You can buy, depending on if you sell one contract at each level. Again, that's you're looking to collect $500. So if you sold 10, you would be looking to collect about $5,000 in a credit premium. So the way I look at it is this stock has had a very big move. They've got their earnings coming a little after this week on the 8th, as you can see down here, 7th, 8th. So this week we should move one way or the other, but hopefully the way I see it, we'll stay under that 2080 and above that 1945. So you're looking at about $135 spread. And that's about $65 from where we are now, $55, and about $75 on the low side. So that's how it breaks out. Again, I would look at selling the strangle on that. And if you have any questions, just drop us a line. And again, any questions, send to me at Matt at OneMinuteTrader.TV. And hope you guys have a great week.